All right, in this one we're going to look at the VPA, and so we have that little pink line running through the chart right there. This is the volume price average, so it's what price should be at depending on relative to the volume and the price movement. So usually it'll come back to that near the open or after the open. We'll get separation, then it'll swing back by. We do want to use some type of structure for that, and so what we're going to look at is we have a sell gap here, and here's our open here, and market kind of makes its little double bounce and then grinds its way up. Looks like a leg in a trading range, and then if we enter here or here, we would be looking for this to return to the VPA. And a lot of times this will do this quite a few times, but for the most part though, we can also use the VPA as some type of trend indication as well. So meaning when price is above it, we want to buy, and when price breaks below it, we want to sell. So that's another thing we could use the VPN for. And so let's see if we can go to the next day here. All right, here's another little strategy we can talk about as well. So we have the open, which is down here, and usually we'll see our convergence, divergence, and our relative momentum down really far in the ditch there. So it's under 10 down here. See, that's down under 10 here on the open. Usually in these cases, as soon as we get a bar going in our direction, so a bull bar, so we'd be looking at like maybe this bar here, like 5 seconds, 10 seconds after, maybe here, anywhere along here, because when the market's down here at these bottoms, what it usually does in most cases is it works its way back to our highway. And so, and then once it finds some structure level, which here we had a previous high, and then it actually grinded its way right back to the VPA. So this happens quite often, and so, and also you'll see that it touches it quite often and bounces off of it. So if we're going to be in an uptrend for the day, this is what we'll see. All right, so let's take another look at it. So this day we kind of was just grinding sideways until it decides to break free. Oop, wrong. There we go. And then we get a bounce off of the VPA here, which is the pink line again. And then we created a buy structure. So this is our buy zone here. This green box that's printed, and we get a double top here. So we get a double top at this area, and so we would at minimum be looking for our trade to come back to our buy zone. But look, it came almost all the way back to the VPN as well. This, once price broke through that green box and closed below it, we know that it's going to eat that zone. So even though this did pop up and we got another little pop off of that, it grinded out here. And then once we had this little triple quadruple top here, this wedge little move, and then it started to break lower, we know that we're going to come back to the VPN, and likely we're going to eat that zone and have it disappear. So that's another, now this happened a little bit after I'm usually up, so I usually walk away around 7:15, so I'm looking to get my trade before 7:15 in the morning there. So all right, let's take a look. I mean, there's many different possibilities throughout the day. Well, I guess this morning, so I couldn't go there. Let's go back a couple more days and see if we can take a look at something else. All right, here's another day, and this one whip wop back and forth across the VPN. And so this is that time where you're talking about trading range open, and then when it breaks that trading range, it's going to go likely a measured move of the trading range. So if you have this as our trading range here, and right there, so top and bottom, and look, it went one measured move to it, and then it came right back to the VPN. And so this is that idea of the morning trading range, and then we get separation from the VPN, and then the market finds its way back to the VPN, and it just adheres to trading range rules, trading rules anyways, but that's a good understanding of that. So did we already look at this next day here? Here's another day. It popped open. We were over the highway and moved up to structure, which again is a trading range in the overnights, or not in the overnights, but at the end of day, it was a trading range, or whatever, 9-10 o'clock for the last 2 hours. Tried to break, and so up here we again, it's a trading range. It's going back and forth across the VPN. All we do is we need to measure that, and you can see that this went a measured move of that trading range right there. And so we'd be looking for this to come back to the VPN at that point. And so we can see right here, this comes right back to the VPN right there. Also testing the underside of that trading range. So again, this is let's see here. Let's get rid of this guy here. Let's see if I think we're getting close to where we started before. Again, here flip-flopping back and forth. Oh, we already looked at this, right? I think so. Maybe not. So, and look at this one, just took off. So, and that's our 20% of the time we're going to get what I call a trend from the open. And so that's once a week, maybe we'll see that. But if we get the trading range here, this comes through, it goes 2 times the trading range. We find there's no sell gaps here, so we have a sell gap up here. So this would have been a good place to short, at least coming back to the highway. It didn't quite make it all the way, but it would have let you out. The second one came back to the highway. And it continues to grind its way up and not coming back to the VPN. So again, this happens 20% of the time. So when this happens, what we have to make sure is that we're utilizing structure if we're trying to reverse back to the VPN. Now, once it doesn't come back to the VPN on the break of the trading range morning, that's when we have a really good understanding that we're most likely going to go towards the end of the day before any of this is going to fizzle out. So if something's pushing this market, it's over past 8 o'clock here, you're going to have an uptrend, and then it goes back into a trading range here at the end of day. As you can see, it goes sideways for quite a bit, and it probably gets another little pop up trying to reach the top of that measured move for that trading range, and then it ends the day. And so if you measured the trading range down here in a sense of get that fixed up there, well, either way, maybe that's poked out, maybe it's this guy here, But from the bottom to the top, minus plus or minus a couple bars, it made it a measured move. So pretty darn close through to the end of the day. The other side of it is always utilizing the highway. So above the highway we buy, below the highway we sell. That's a good way to go about it as well. If we're above the VPN, you want to buy. So again, if we're above the highway and above the VPN, we want to buy. If we're below the highway, below the VPN, we want to sell. Whenever you're above these spans, meaning this blue, yellow, green, and magenta lines here, as they follow, as the market's above those, you want to continue buying. Sooner or later, it will return to those volumes. Those are volume averages. So sooner or later, it will return to those. And so hopefully that helps with utilizing a couple little things of the open with the VPN.